Hi, everybody. Today, two things. Firstly, introducing Jarvis Carroll, one of the core team members at QPQ. And secondly, to look at intermediation of payments. This takes two big forms that we've seen. The first, and why we're having this conversation today, was a post in LinkedIn yesterday celebrating that Binance and DFX have facilitated payments in Bitcoin in Spar shops in Switzerland. And my commentary was, this is not people trading in Bitcoin. Spar is not accepting payments in Bitcoin. They are accepting payments in an intermediated form of Bitcoin on somebody else's ledger. Actually, probably Binance in the background, with DFX as the regulated entity in Switzerland providing the interface. The other aspect we see of this, and it's getting really big now, is this whole thing with stablecoins, where somebody runs a money market fund where they denominate that money market fund in tokens, claims upon the fund, which they claim is fully backed by US treasuries without any actual audited evidence of this being the case, with yields that exceed that would be expected for a pure treasury money market fund. And gloriously, they get to retain all of the yield from said bonds in their money market fund, denominated in tokens. Let's start with the LinkedIn post yesterday and this idea that, and I've heard this many times. Somebody said to me, "Oh, I can pay for my hotel room in Bitcoin. I can buy tomatoes in a shop in Bitcoin," as per the LinkedIn post. The reality is they're not trading in Bitcoin. It's merely a representation on a ledger. And that was the entire point of this, was that it was to be something that was a peer-to-peer electronic cash system, not a peer-to-crypto bro, which is what centralized exchanges providing a ledger to other operators effectively is, especially when those so-called exchanges are actually centralized operations without the grace of regulation. They run a ledger, they run everything within it. All of the custodial aspects are theirs, and yet there's no oversight. So, Jarvis, introduce yourself and start into the topic, please.
Of course. Hi everyone, I'm Jarvis. A lot of our viewers probably have seen me around trying to help people run our wonderful mining software.
You're famous on Telegram.
Famous on Telegram, of course. When I'm not trying to organize and improve the software support on platforms and so on, I'm working with some of the other, as of yet, hidden team members with working out our exchanges, actually, our decentralized exchange that we're working on, our Da Vinci protocol tokens, and, well, token platform.
I should probably step in there a little bit. So what Jarvis is working on with a couple of other team members is how we facilitate an actual DEX operating on the Gajumaru, allowing people to do various things with different types of assets, tokens, etc. The rules are that it has to actually be decentralized, not just performatively, and it has to work. So there's a hell of a lot of work there, because if anybody has looked into this in any detail, they'll notice that the so-called DEXs are largely not centralized. Are largely not decentralized. So Jarvis, let's put that to one side, because that's another day's topic, the whole issue of whether a DEX is actually a DEX, whether the words mean anything. I know Craig has got some pretty trenchant views on that too, which sadly for people in the so-called DEX environment are extremely well informed and on point.
Also, what Jarvis glossed over is that a lot of the coding he's doing is helping me fix my bugs. He was very polite about that, though.
Yeah. Yeah. The work that's being done on the mining software is vital. It's the key to how we get millions of people to participate in and create the economy we talk about. The idea of blockchain was to create an open resource layer in which we can establish an economy for the people, by the people. That's the whole idea of a decentralized economic fabric. It's not what anyone did. We talked about that at length in the past in regards to the Garden of Eden problem. But coming back to the point in hand, Jarvis, you've seen the post on LinkedIn that I referenced. You've been looking in some detail about what's actually happening when exchanges start to represent themselves as being almost like a central bank. They are the custodial bank even, but they're not regulated in any way, shape, or form for these purposes. They're just highly centralized concentrations of risk, and you have a lot more insight into this than we do, perhaps. What do you think is actually happening here?
Yeah, exactly. Well, it's a thing that people have sort of just taken for granted and let happen in so many of these cryptocurrencies is, first of all, using centralized exchanges as your exchange. You're putting all of your assets onto this place, letting them issue you a totally different instrument, which is a Binance issued Bitcoin. And then you buy and sell Binance issued Bitcoins, and generally people will put fiat onto an exchange, buy some Bitcoin with it, then later sell the Bitcoin, take some fiat off. At no point did they ever touch Bitcoin, did they ever touch the chain. They're just touching this Binance issued instrument. And now, in addition to that, we get to use Binance issued Bitcoin to purchase our groceries in Switzerland. So this is being celebrated as Bitcoin's finally becoming money, but all of the original promises of Bitcoin being a payment processor that anyone can access, a currency that's stable that no one can expand, well, Binance is the payment processor, and Binance is issuing the currency in the first place.
I'm not sure that, hold on, I'm not sure that Binance is the payment processor, because there has to be a locally regulated entity performing that. And I think that's what DFX do. So DFX, I believe, are a sort of a crypto, a little bit like the crypto asset regime operators in the EU, the MiCA type approach. So in Switzerland, it's called an SRO. I believe that's what DFX do, and that's within the remit of that operation. But they are providing the facilitation of that. The back end to that is that the Bitcoin is actually in a Binance ledger. So the buyer of the tomatoes has a Binance ledger holding of Bitcoin, or through DFX, who in turn use Binance behind that. And Spar itself has an account with DFX and or with Binance directly. But Binance in the background are the ones that are providing the ledger, but they're not actually a regulated entity. DFX are, and they're operating in a legitimate way. The issue is really around how Binance are operating, because they're the ones who actually operate the ledger. That's where the Bitcoin is actually sitting, if there's any Bitcoin at all, because ultimately we have to take Binance's pinky promise that there is Bitcoin backing this, which goes back to this whole issue with stable coins too, where we have to take pinky promises and attestations that things are as they say they are, despite the fact that they have a track record of comprehensively lying. Anyway, back to you, Jarvis.
Yeah, exactly. Well, that's only another function that Bitcoin is meant to be providing. It provides the ledger, it provides the payment processing, it provides the fixed supply store of wealth, and now it's merely a financial instrument. It's merely a way of speculating on whether the number is going to go up or down, and the Binance issued Bitcoin is meant to be some kind of index into that. DFX is your payment provider, Binance is your ledger. So all of the intended promise of Bitcoin is gone. The only thing that's left is a new obscure speculative asset that you can.
Yeah. So look, let's be clear.
Bitcoin. That's not even Bitcoin. Sorry for interrupting you. So going to the shop, and if I have Bitcoin actually on the Bitcoin network, I cannot pay with those, right? I can only pay in the context of Binance. So I'm not paying with Bitcoin. That's the thing. I'm
Exactly.
paying with some external service that supposedly has Bitcoins somewhere in their cold
Yeah.
storage.
It's intermediation, and this is the point.
Yes.
The title of the head of the paper is a peer-to-peer electronic cash system. What Bitcoin was, and we keep saying this, is a multi-millennial proof of concept for how we can create real money and actually make it work between peers, that I can transact with electronic cash between us the same as we would if I gave you a 10 franc note or a 10 euro note. Although you would greatly prefer to have the 10 franc note, given that it's not quite as much of a Ponzi scheme as or it's not a Ponzi scheme, not quite so much as a money printing exercise as the euro.
Yeah, we didn't even touch on the fact that getting back to fiat, you still have the central bank problem. That's not been was the whole getting away from that was the whole point of trying to have cryptocurrency in the first place, was money that can't be hyperinflated.
It can't be debased.
And
yeah,
yeah,
so the idea
and we're
was
just like
to create
right
real
back
money,
there again.
and real money being money that you can't debase, and then to have it be tradable between peers without intermediation. So here we are, pretending that Bitcoin works when actually what's really happening is an institution, Binance, who has reserves of Bitcoin, allegedly, who are not regulated, not audited, don't have any real transparency around this, who have track records of not being as honest as people like to think, are telling everybody, hey, you can put your Bitcoin with us, we will custody it, and we will create a ledger that allows you to trade in it. Why? Because the existing Bitcoin network would mean that if you went into Spar to actually pay with Bitcoin, you'd be standing in the queue, depending upon how much you're going to spend, for somewhere between 10 minutes and several hours in order to pay for your tomatoes as per the post.
Unless the cashier decides to just spy on the Bitcoin mempool, and as soon as they see your transaction ending up in the mempool, they say, oh yeah, probably going to go through away with you.
Which
But
we've
that
seen.
implies trust. But that
Yes.
implies trust in the system. Like that you're
Yes.
not going to issue a competing transaction.
Yes.
Yep.
Yeah.
So it's
And this
it's
is the
the
real issue.
zero confirmation transaction on Bitcoin that essentially hasn't even made it onto the chain yet, but you can't hold up the line and waiting for it to be confirmed. So this is what you do, and then the vendor assumes the risk. So in this case, it's the regulated entity in Switzerland that assumes the risk.
No,
And
it's
No?
not. They're not.
Well,
they're not actually
okay.
trading in Bitcoin at all.
Yes?
So they have an account with Binance, and Binance are making a ledger for them of whatever assets are in their account. And they are using that to transact. So really what's happening is we are back to trusting the messenger, not the message. Remember, blockchain
Yes.
does one thing.
And-
it allows us to trust the message, not the messenger, securely at scale. That's it.
So in the article, it said that they can save a lot of money on the transaction fees compared to, for example, Visa. Now, as I understand it, quite a bit of the fee part of a Visa transaction is covering the cost of the various banks assuming part of the risk, fraud risk, and also carrying the burden of actually being regulated and complying with pretty hefty regulation. So of course, if you don't have to do that, you can do it faster and cheaper. Except for mere mortals, that means you don't get to be in the payment business because you're not compliant with regulation, which is again, presumably here, it's fine because it's Binance and we trust Binance. Or at least they're big. Or something.
Right.
Yeah, but
The,
that
the name
means
is known,
if
so it's fine.
Binance decide that you cannot pay for your tomatoes, you're stuck. Like they're in full control and custody of your funds,
That's true.
and the whole idea of decentralization is out of the window. There is nothing peer-to-peer here. You're just
Yeah, and you go.
talking to institution.
Yeah, you go straight back to the debanking problem, where is it DFX or whatever the processor in this case, or Binance, either one of them, if they decide that, or if they get ordered to, it's a single point of failure in the system from regulatory perspective. If you said the wrong thing online, and they decide that you can't transact anymore, that's it. You're right back to that same situation again. So like every single design point, every single goal, whether fiscal or social, that Bitcoin came out with, the whole crypto movement was about originally, has been completely wiped away by this structure. It's kind of amazing that's like
And
we've
it's not
recreated
just-
all the same problems in an even more opaque way now.
And it's not just that these institutions do exist, it's that they're the only way to use Bitcoin at all. No one accepts Bitcoin on-chain payments anymore. They all stopped ages ago because A, it's a pain to receive the Bitcoin. B, you don't want to be stuck holding the Bitcoin at the end. It's a pain to get rid of it again because everyone who's accepting Bitcoin is accepting it to immediately sell, which I assume,
Hold on. We
it's
don't
not
know
revealed here.
That's a step we don't know. So in the responses back and forth within the discussion on LinkedIn, there was a response from DFX saying actually Spar want to keep quite a bit of the Bitcoin themselves. So why would you want to hold Bitcoin? Because number go up. It went from being the multi-millennial proof of concept for how we can create real money and actually have it transact between peers on a blockchain, allowing us to trust the message, not the messenger, security at scale, to becoming an open Ponzi scheme in which the more people get involved in it, the more they post. I mean, nobody posts every day saying IBM shares are going to go up today. They're going to go up today and you better get on board because... No, they constantly post about Bitcoin. Bitcoin's going to go to the moon. Bitcoin's going to do this. It's going to go to 2 million next year. It's going to go to 100,000, 250,000 by June. And then it becomes December and so on. It's an endless litany of incantation in the hope that more fools can be pulled in to make the price go up.
Holding the Bitcoin didn't really mean that they want to actually have a wallet on the Bitcoin chain and have Bitcoin in it, right?
Correct. So what they want is they want to have some sort of access to that in a way that they think is trustworthy. The question then becomes, well, is Binance trustworthy? They're not regulated as an exchange. So on what basis? Then they're not regulated as a custodial bank. And that's actually what they're doing. They're providing a custodial service. So in theory, they're creating a ledger that says Jarvis has 1 Bitcoin, Craig has 4, Dimitar has half, Greg has 1/10 of a Bitcoin, and Ulf has 9/10 of a Bitcoin. In theory, they have all the Bitcoin to underpin all of those positions, but only in theory. In reality, they may in fact be taking a position in the market that says, we don't think that Bitcoin's going to continue to rise, so we will essentially write a differential contract here. And we will tell these people that they have what they think they have, but we think that we can buy Bitcoin back at a lower price in 6 months' time. So we will go short Bitcoin and allow them to stay long, playing the book against their own customers. There's no way that you know or don't know that that's what's happening because they are not. There's no oversight. You just have to take their pinky promise that when they say that there are 100 Bitcoin on the ledger and they're divided between their clients, that there actually are exactly what they say there are. I mean, there's lots of ways you could play this in a way that could move some of that value off their balance chain, off their balance, off their account, because ultimately, yes, the Bitcoin network itself is transparent and you can see how much value is in a wallet, but can you see how much Binance say that they are representing their clients have? the differential between what is on their ledger on the Bitcoin network versus what is in their internal ledgers isn't something that's a public data point.
So to me, who I'm not a clever finance guy, so I have to try to keep it simple. The way I understood what a large part of what happened before leading up to the crisis in 2008 was that there was a bonanza in new clever investment instruments that essentially found new ways of hiding the risk. So once things started getting really stress tested, it turned out that people didn't know what or a lot of actors didn't know what their exposure was. And a lot of them were overexposed, and they would have crashed unless they were saved by the taxpayers. And so anytime a new shiny object becomes available and it's unclear how it's actually connected to fundamentals, I feel like we're basically doing the same thing over and over again.
Definitely a new episode of financialization where there's supposedly some value somewhere, and A points to that, B points to this, C points to that, and you're not sure if there's inflationary percentages going on in the middle of here or not, because it's totally opaque. And each different layer of this is under the complete control of a single player that can act as a denial point for you. If you need to pay something, they knock you off the system or whatever. And there's no way of checking that. Like, again, every single goal of blockchain has been just completely dispensed with because people are excited about number go up. And it's totally crazy to watch.
And
Yeah.
what happens when Binance, if Binance does become the ledger that people are settling payments on, and then someone says, oh, I want to make another exchange that you can transfer Bitcoin on, quote Bitcoin, that they get to issue, and Binance realizes, wait, I'm going to have competition in the money printing game, and invents reasons to explain to their new friends in government why that should be illegal. And once institutions are in charge of these things, the politics that every institutional system we've seen go through in the last 200 years, why do we expect this to be
get back to
different
the problem
with Binance?
that perennial problem that public safety law is never about public safety. It's nearly always about creating an exclusionary barrier to entry in an industry unless you have the right friends and have already buttered them up. The real competition happens in the political lobby in this case, and that's a pretty wacky game. It's not something I would trust the entire economy to.
And I guess that's that's a very interesting point, and what actually underpins an innovative free market. It's a pattern that can actually be replicated. So as cumbersome and expensive traditional banking is, it can be replicated because there is a rule set that we at least trust. And so if you start doing end runs around that and saying, well, it's a lot cheaper and faster this way, then you end up in the, well, not replicable. For example, we couldn't throw ourselves into that game and say, well, you can use us instead of Binance, because we're not that trusted and big an actor that that regulators would dispense with the rules for our benefit.
Right. And that gets back to the point where our proposition is that nobody can be trusted with the minting function. It has proven throughout history So here's something that's always replicated. No fiat currency has ever survived. Ever. They always die. They always find an end. They always crash at some point.
Because the fiat money goes back to faith in the government. And right now, we're seeing a lot of pressure on central banks that are supposedly independent to keep interest rates low because massively indebted governments can't actually meet the interest payments, and it's a huge cost. In the UK, you have the Bank of England effectively becoming subservient to the Labour government, who have decided that economics is really just a storytelling episode. In the US, you have completely out of control governmental spending, not as bad as in Europe, where we have massively higher social welfare expenditure. But again, there's pressure being put on the Fed to keep interest rates low, contrary to what the Fed perceives to be economic activity, which it wants to suppress through higher interest rates in order to create greater stability. The role of central banks is really first and foremost to ensure market sanctity, or allegedly. Now, when you politicize that, you undermine that confidence. Whether that confidence should be there in the first place is a whole other question. But between these points, you're right. Fiat currencies require us to have faith in the issuer. And ultimately, that there is an issuer at all is the problem. In reality, this is the beauty of Bitcoin, and this is the beauty of what we've done with the Gaju. There should be no issuer. There should be no money printer. There is a mint that requires a proof of work process to be undertaken to do this. And Craig, you talk very well about this as an overarching concept and what that drills down into.
Yeah, well, that the concept that there's a mint function distinguishes blockchain cryptocurrency from fiat currency. Just for a second, I think it's good to explain the term fiat, where I say no currencies survived the test of time, and that includes precious metal currencies. The reason for that is that precious metal currencies, when they move from being precious metal trades or trades denominated in a precious metal to being a coined precious metal, you start out with the 1-to-1, silver, copper, gold, whatever it is, 1-to-1. But the king's stamp on that thing, or the emperor's stamp, or whatever it is, that winds up actually being the value marker. And it is illegal to deny whatever the value that's denominated on the coin is, even when they start substituting trash metals for the real thing over time. So that's where the term debasement comes from. The precious metal base of the currency actually gets debased, and you wind up having diluted precious metal coins. And now they have just become symbolic tokens of value. And if you deny that value, that's a crime. Again, this gets down to the ordering of it. You wind up going from a precious metals based trade economy to Genghis Khan money again, where it's just on cloth chits, and the chit says how much it's worth, and if you don't comply with whatever the value it says it has, you're guilty of a capital crime. That's how the original mega Chinese empire.
It was to deny the authority of the emperor or the king.
Correct. Yeah, exactly.
And within that, so many evils and ills can be hidden. This goes back. This isn't something we need to go back to the Mongols for. This is 1912, J.P. Morgan's testimony to Congress on the validation of Wall Street. He talks about what is money, and in that he says, well, your greenback, which is debt issuance, it's a pinky promise to pay, which is not so very different from a bond, except it's denominated in the currency issued by the Treasury, and ultimately we have to just trust that the US government will honor that debt in the event that we go and cash it in. Cash it in for what? Reality? Hard to point at. And he said, the only real money out there is the British pound, which is 1-to-1 backed by gold. That was his opinion anyway. But I don't know that the UK Treasury at that, or the Bank of England at that time was genuinely publishing how many pounds are in circulation and the linkage to gold, because the temptation to break that linkage becomes too great. And this is what we keep coming back to. History, as Chris proves time and time again, that no entity, regardless of how much supervision or oversight there is, can ever be trusted to run that mint function. I mean, complete operation of the mint function has time and time again, as Craig points out, been destroyed. And even where we saw the gold standard being broken, it really had been broken long before. I mean, people talk about the moment in 1973, but in truth, the disparity between what dollars were in circulation versus the gold on account had long since been quite different.
There's even cases in history of genuine gold inflation, which was one of the reasons for the coinage process, having the mint authority granted by whoever the king was. It's happened in Japanese history where a certain clan realizes that in their territory they have a really, really juicy gold vein. Well, what can they now do? They can start making their own pressed coins that look just like the ones everybody else is using, but they're the only ones that have them, and they haven't told anybody that they have a juicy gold vein here. So now they get to actually inflate with legitimate gold. It's testable. The economy. Now, that's obviously something that whoever the regional authority is would want to put a cap on, because suddenly this one place is very close to the source of inflation, and nobody even realizes it's going on. But the whole economy could be getting pumped full of real gold. But because so much gold pops out in the economy at once, it destabilizes things. So this is, it's not unique to the Japanese case. This happened in several gold rushes that we have very detailed accounts of in the United States, and silver rushes where a bunch of people did a lot of work to take a bunch of gold out of the ground over here, didn't tell everybody about it, then sold it to people who were going to put it back in the ground somewhere else in a vault. And it didn't make new things get built. It just was a massive gold inflation. In fact, Spain's economy collapsed based on gold, the gold economy hyperinflating when they took over a large swaths of South America that had generations of gold mining already occurring, and they brought back galleons full of gold that had already been mined in South America, which the Europeans had been completely isolated from, and suddenly it hit the market. Spain was rich for a time, but that eventually collapsed. There were stacks of reasons why the Spanish economy collapsed after that, but one of them was hyperinflation in actual physical gold. So it's, even if you have the real deal, you can still screw things up. It's still dangerous.
Hold on, Craig. You often talk about the creation of money, that the creation of gold in the universe required the Big Bang to occur. So what do you think?
Not the Big Bang, supernova.
Yeah,
Okay,
exploding stars.
So exploding stars, forgive me. But the point is, you've just talked about how discovering a new reserve of this of gold changes the idea of how big the pool is, and therefore what the value is completely. Well, Elon Musk wants to get to Mars and wants to explore space, and he's spending huge amounts of money to do that. Does anybody think that's purely because he thinks it could be interesting to be on Mars, or do we think that because actually there's huge potential in essentially putting mining operations onto an asteroid that may contain all kinds of precious and rare metals, which can then be brought back? And if you suddenly brought 1,000 tons of gold to Earth and began a pipeline of that coming to Earth, don't you create exactly the same thing we saw happen in Europe when the Spanish opened up South America and began to extract all the gold from the South Americans and bring it back to Spain?
Yeah, 100%. And I don't think that's Musk's motivation. I think he assumes he'll be dead before colonies are really in operation. But as always in geopolitics, capacity informs intent. And if you have the capacity to colonize Mars, you're just not that far from being able to bring... I mean, asteroids are pretty big and heavy. And there's a lot of them that are incredibly dense. And we know that a lot of them are just absolutely chock full of super expensive metals. Tungsten, nickel, gold, all that stuff. So yeah, you bring an asteroid into Earth orbit. It's how much down elevator are you willing to do? Well, there's no real limit to it. And it's a lot. Once you have gone that far, getting it down to Earth is a lot easier than bringing it up from the depths of the Earth. So there's going to be a point fundamentally somewhere in the future where access to precious metals changes radically in terms of the effort required to get a hold of it. And if that's what you're basing your entire economy on, that's a pretty rough proposition. And once you get into like interplanetary trade concepts, it's hard to tell exactly what people are going to use as their the representation of value for trade. But given how social humans are, there's no way that there's not going to be trade going on. The magic of cryptocurrencies as a concept, this is the most insightful thing I think that we got from the Bitcoin paper, is that the concept of cryptocurrency is that instead of the value referring to a thing, the index of value itself, whether it's a puck or a gaju or whatever, is self-referential, and it's a mathematical construct now. That's a completely different. So you don't have to go get the thing. You got it from solving a mathematical construct, and there's a fixed amount of it now, and that's self-referential, and we all share the history of its transfer, so you can trace it back by provenance. That totally changes the game when it comes to currencies just themselves and how debasable they are and so on.
Yeah, which is why we had that little slogan on the pop-up in DC, saying that the Gaju was the interstellar peer-to-peer. Oh no, sorry, it was the peer-to-peer
Interplanetary
electronic cash. The interplanetary peer-to-peer electronic cash system. Because
you practically could trade
the lifetime that 87.5 years is what it will take to mine all of the Gajus. Within that time, it's likely at the progression speed that we're seeing that we will indeed have an interplanetary species, because there will be colonies on Mars. There will be colonies on the moon.
Actually, one reason why we can generously credit Musk with actually being driven by his original vision, as he says, is that not only has he proven to be an exceptional technological innovator, he has also shown that he has the capacity to make a huge profit along the way, which is absolutely necessary to finance that kind of dream. So,
not everybody can be Jeff Bezos, who manages to get his investors to continue to throw money at him because he wants to continue to spend money he hasn't yet earned. Musk has done a very good job of commercializing his technology. Yeah, we could all do with doing it, especially when you get to go public with the obvious statement of your margin is my profit. But the point that we're making here is that what Bitcoin did was create this breakthrough capacity to move away from trusting somebody who controlled a mint. I had an interesting discussion with another guy on LinkedIn, a chap by the name of Troy, last name escapes me, but he's looking at how stable coins effectively are the privatization of money supply, which is true. That's a topic for another day's discussion, the whole Genius Act as well. And the solution to this is to have better governance and better control over the actions of the Fed. And my position to him is, well, no matter what you do, you're going to have two fundamental problems. The first is, by reference to what? Are you saying that the dollar is not inflating? That money supply is not increasing? How do you see this? How do ordinary people see this? Because we're lied to all the time. Producer price index, PPI, and consumer price index, CPI, they're not indicators of inflation. They're indicators of inflationary impact in the economy. inflation is the printing of money supply. The gearbox through which it moves to reduce its impact on price indexing is human capital. This is why the average person is aware that their economic well-being and aspirations are less than that of their parents, and why their children are likely to be are unlikely to be able to buy a home. The reality is that real assets have continued to inflate in price in order to keep up with inflated money supply. This is why we see a bubble of everything in the world. Real assets are so expensive relative to people's income that the days when somebody could buy a home that cost them 2 or 3 times their annual income are long behind us. The only way that young people today are able to buy homes in Western Europe, Japan, the USA, is if their parents remortgage their homes in order to give them some liquidity, that opening deposit. So my point to Troy and to others who make the argument that all we need is better supervision of the mint is no, this isn't true, because your reference points don't really work. And secondly, what makes you assume that, unlike every other time in history, that will remain honest? The incentive is not to be honest. The incentive is to be dishonest. And people run to where the incentives are, whether they will tell you so or not. That is the demonstrable reality from human history. So the question becomes, when people are saying things like this in the LinkedIn context, and we've seen it again and again. One of the guys who was involved with this, I had a big argument with, because he said he didn't like what we say, that Gajumaru is an actual blockchain that actually works, minting real money that really works. Because he said, oh, I've been to Zug and I paid for a hotel room with crypto, with Bitcoin. And I said, no, you didn't. You used a Visa card. The Visa card used a third-party provider of a ledger of Bitcoin. And the whole thing was happening in the background, thoroughly intermediated many times over. You did not stand at the checkout doing a transaction on the Bitcoin blockchain. His response, nobody cares. My response, well, if you don't care, then you don't care about money. You don't care about the provenance of money. You don't care about the reality of money. And you're quite happy to continue to play the game where, firstly, money supply is debased. And secondly, where all of your transactions and economic operations within the context of economic trading are all taxed by rent-seeking intermediaries. So none of what we set out to do with Bitcoin is being done.
Yeah. I mean, it's a good approximation that nobody cares as long as it seems to work for me right now. And running up to 2008, nobody cared, or very few people cared. And I remember prominent pundits and politicians speculating that maybe we are now looking at a new type of economics, new fundamentals.
If you spoke to the fundamentals back then, and I know because I did, you got shouted down. You could work on an analysis and assessment contract for a European bank at the time. Explain that there's exposures that nobody understands, and there's geopolitical risks that everybody's putting off. And the response that you would get is, you don't know what you're talking about. I've been here 20 years. This trade has never failed. The carry trade to East Europe has never failed. It's all fine, but it's backed by junk. It doesn't matter if it's backed by junk. We know our junk, which is why the fact that they don't know is why it's junk, of course. And on top of that, the risk of war, they completely discounted. That's why one of the big triggers for that crash was the BTC pipeline had just been completed. It ran through Georgia, former Soviet territory. The Russians said, don't do that. Everyone did it anyway. Suddenly, Abkhazia needs to be saved, or Ossetia needs to be saved, or whatever it was. The public reason doesn't matter for the war. The reason for the war was to drive tanks up to the BTC pipeline that was brand new, paint was still on it, take a picture, and say, see, That can be ours if we want it. And then they left. Suddenly, oh my goodness, there's actually a threat of war in the world still. What does that mean for all of the crazy amounts of carry trading that we've taken out at 0%, rushed through Landesbanken and dumped into East Europe, and then made further leveraged loans on with West European and American real estate bundles that are totally opaque because they're all trash mixed with a couple of good things. Now we've been doing this for 20 years. It never fails. And you're saying there's a risk here? You don't know what you're talking about. I've had my whole career based on this particular trade, and we're good. Okay, well now when things go wrong, it took 2 weeks before the crash happened. So from the invasion moment until the crash happened was about 2 weeks. Why was that 2 weeks? It takes 2 weeks to send a physical person to go to the place and look around and realize, hey, everybody has a car dealership and a fashion place and a restaurant. Nobody makes anything here, though. And these economies with little tiny currencies that are skyrocketing because all the yen that Japan doesn't want to talk about because it's reducing. This is inflating the Japanese yen, which is having the effect of making the yen cheaper, which keeps Japanese exports going. So the Central Bank of Japan doesn't want to talk about this. They're not. I mean, they know it's happening, but they're not going to say anything. It's all going to these little tiny East European economies that all have their little tiny currencies and all skyrocketing. And they're skyrocketing to the degree that if you want to make money, just take out a Swiss franc loan. Just hold it in your local currency. If you lose money, it's fine. You might lose, 10% on your investments that are local? You're going to make 20% just on the zloty going up. So take out a bigger franc loan to cover the first loan. This is great. That's basically what was happening. So when it got exposed, hey, there's actually literally a physical risk of war still. It took about 2 weeks for people to realize what the exposure was and that there was nothing new. It was all retail stuff. Everybody had a music shop or, again, it's music shops, car dealerships, stuff like that. And everybody that was buying your stuff, they were all buying it on loaned out money. Your revenue's coming in from loaned out money. All this was just like propped up by loans. That started to get deflated, and it was an accelerating race to the bottom now. The only way to get out of your position in your local currency that had been sprung up by the carry trade was to beat everybody back to the franc, back to the yen, before anybody of your neighbors did. It was a horrible, horrible problem. And that was just one of the tightly wound springs of the carry trade that unwound all at once and then exposed this problem with the real estate assets that everybody thought, hey, we could fall back on that because there's real stuff there somewhere, right? Nope. They were not the real estate assets themselves that were being bundled. They were the loans on those assets, and most of them were non-performing the moment something went wrong. So, yeah, the whole house of cards was set up to collapse. And that's why people didn't really want analysis and assessment work back then. And that's why I went back into PMC work at the time, because that's where the money was. Because nobody really wanted to hear it.
I remember I had some Ericsson shares back then, and Ericsson was doing really well. And I asked a friend of mine who was working in the finance sector, I said, what do you think? Should I sell off my Ericsson shares now? Everyone says they're going to keep going up. And he laughed and said, well, we never thought it would get to this point to begin with. So what can I tell you? It's left fundamentals long ago. And he said, well, generally, I wouldn't put anything in the stock market unless you are prepared to lose all of it. And I think that was pretty good advice.
Yeah,
so,
that's
look, what Craig's touching on there is so I have quite a few wrangles with the Bitcoin crowd, calling out the fact that nobody with any other asset does quite the same job of telling everybody else to buy it for fear that they will miss out and that the price is going to keep going up. It's an open Ponzi scheme. And they then turn around and say, well, so is fiat money. Now, I don't like what about arguments, because it means that you're not really focusing on what the solution is. You're just focusing on making an argument about how your flawed system is not as flawed as somebody else's flawed system. They're all flawed. And I don't think that we should be so reductionist as to accept that we have to work with something that doesn't work, or at least only works for a limited number of people, and everyone else just has to suck it up and put up with it. But what Craig was talking about there is why those people would say that so is fiat money a Ponzi scheme, because ultimately what a Ponzi scheme relies upon is that it can create the illusion that the returns are real, and in order to sustain that game, it needs you, in the case that Craig was talking about, to keep taking out more loans in order to do more things, because the more of that you create, the greater amount goes into the system. And that's the greater fool aspect, that a Ponzi scheme requires the next person coming in to put money into the system in order to distribute outwards. The thing is, there was so much more to what went on with the global financial crisis. You talked about one of the springs that was tightly wound. There were others, and this is what I fear that we're seeing.
There's like
with
a
the
dozen.
stablecoins
It's
as
crazy.
well. With the table coins, the yield that Tether is able to have on the amount of reserves it claims to have, which we must take their word they have, because the way it works is they make an attestation to BDO, and BDO says, oh yes, this is true. Now this is an attestation, not an audit. They're saying, yes, we have seen the information they provided us, and we confirm that we've read the information and confirmed the details that are there. Not that we've done an audit. Two different things. So in that context, you have this risk that something that we think is really a US dollar, like a US dollar treasury backed coin, is actually completely backed by US dollar treasuries. Excuse me. Now, there can be two aspects to this. One is, you see with Silverbank in the States a couple of years ago, they had a big issue with having to refinance all of their reserves because the changing interest rates. The second is, you look at it and say, okay, so why is your profit, which, bear in mind, with a stable coin, it's like a money market fund, except it doesn't give any of the yield that it captures to its investors. It just gives them the token utilization. It's a huge rent-seeking operation in that way, and a very interesting one where people are willing to give you money in order to have the utility of transacting on chain without having any of the yield that deposit would otherwise yield from buying US treasuries. But what if these aren't US treasuries? What about if some of this is commercial paper? What about if some of this is the Bank of Haiti writing a bond which Tether have bought? Now that might have an 8 or 9% yield on it, much more than US treasury bonds do. This is how you start getting higher outcomes from that than a money market fund that is properly regulated, does have to disclose all of its holdings, etc., and does have to prove that everything is indeed in US treasuries. This means that we are again playing that same game we had in 2008, where good high quality assets, or at least what they call investment grade assets, are being conflated within the same financial instrument with very low value or low credibility assets that have a higher yield. And that in 2008 was what led to this. The whole thing just began to spiral inwards together. And I don't think it's an accident that Bitcoin came out in the midst of all of this. The white paper followed this. And I think people caught into it because they realized that actually we cannot trust our money. We cannot trust these things, and we do need to get away from this. Unfortunately, a lot of the people who saw that at the time aren't in Bitcoin today, or have maybe lost faith in the system because it stopped being that quite some time ago. Sorry, just I wanted to pull that out a bit more, that the 2008 financial crisis operations and how today's stable coins are not so different from then, the packaged investment products that had good and bad assets brought together and then rubber stamped as if they were the higher value or higher grade asset, when in fact only a part of the asset was a high grade investment grade.
It feels like such a I think it was John McKay who wrote the original 1800s version of The Madness of Crowds, and he talked about the South Sea affair and the tulips and all the crazy fads that happened. And 2008, we certainly had a big one going, and it was decades long, which is the crazy thing about it. It's this decades long bubble buildup, and the pain of that unwinding in 2008. Out here in Japan, the yen almost doubled in value, which was crushing to everybody that was doing foreign business, which is like a lot of companies here. The pain of that, you'd think, would be like a cautionary hint. And as you say, it seems like it's probably not a coincidence that Bitcoin emerged on the tail end of that. Is like, hey, there's this, maybe we want money that can't be debased, and we should make this innovation that it's self-referential, and so on. That seems like a very almost if you just look at like kind of human history, when there's a horrible crisis, very often there's, from some quarter, often unexpected, there's a solution that emerges, some innovation happens, and Bitcoin emerged at that point after the 2008 crash. And then what? It's not even 20 years ago that happened, and we're recreating the same problem again, just with different words, different buzzwords, way less oversight, much more rabid addiction. And I think a component of this is there's also the demoralized populace problem right now, where so many people, especially in Western societies, feel demoralized. They feel powerless. They're watching all this crazy stuff go on with like the, just wacko stuff we just went through COVID. Things that if you told somebody in 2017 what was going to start in 2020, nobody would have believed you. If you told somebody in 2015 what was coming at the end of that year, starting with like the Trump campaign and everything that's happened since then, everybody would look at you like you were crazy. In fact, a lot of people looked at me like I was crazy when I explained some of what was going on at the time. Yeah. So here I am being crazy all over again. You'd think that there would be some lessons woven into this that society would have adopted, but in parallel with all these crazy events, much of the public has become demoralized to the point that they feel hopeless. It's not illegal to start a business, it's just made impossible. This is a theme that we see quite often, and a lot of the people that often start businesses are self-starters. They don't necessarily lean the right political direction, the correct political direction to be allowed to do things. When you demotivate that segment of society, people start feeling trapped in a whole new way. And at that point, sometimes people just give up on the fundamentals and say, you know what, maybe this is all just a big Ponzi scam. I don't care. I'm going to try to time the market because that's all I got left. And YOLO, there's nothing left for me anyway. I'm not going to get married. I don't have kids. Society's all broken up. It's all battle of the sexes now. Everyone's polarized over the silliest issues. And we all have to hate each other now. Why would I even try to operate in a high faith way when my own country is being overrun by low faith people? So they go straight for the low faith play. Okay, well, if the game is to scam everybody, and that's what's happening, the system's trying to scam me, I'm going to try to find some way to scam it back, at least. That's generalized society jumping down to a lower tier of trust in terms of the way it operates. And I think some of the sort of wanton and ready embrace of this, a lot of things that are just open scams, that go on in the crypto world right now, is a result of this kind of low faith demoralization problem that's ongoing. So like one reaction to the 2008 crisis would be come up with something like Bitcoin and try to fix the problem. That's a high faith play. Another version of that, though, a side effect of this is as the population gets more demoralized, you're going to see increasing low faith plays. And I think we're sitting right in the middle of that right now. That also kind of traces maybe the if you're familiar with the adoption curve, where you have like innovation, it's not quite ready, early adopters get disillusioned, that sucks, then you have the gap of despair, and then eventually whatever the thing was, if it had merit, comes back very powerfully. We saw this with like the concept of smartphones, and there's a bunch of technologies that have followed this curve. I think that cryptocurrency as a proper blockchain backed thing that has no issuer at all, that may be one of these type of technologies that's going through exactly that curve right
Hold on.
now, and that curve is paralleling the low faith place.
Is it? Because I think you're right. I think that there was this early adoption, and then there was the trough of disillusionment. But what came out of that wasn't, well, let's innovate. Let's make the change that's necessary in order for us to create what Bitcoin pointed to. Let's make Bitcoin hundreds of thousands of times more efficient. Nobody said that.
Well, there was a
did,
spurt of
but we
that
did it
in
naively.
We did, but
2017,
hold on.
2018.
You had the Bitcoin NG white paper, which was produced as an answer to this, right? But nobody actually wanted to see it happen. Why not? Because what happened when we got into that trough of disillusionment, not just that it was hard, but it ran contrary to the interests that were in play. Because the people who had lots of Bitcoin were like, okay, well, if we make this thing go up, we get extraordinarily rich. So let's focus on number go up. Let's move away from this proof of concept, which we can see that it is, and try and turn this into something that it isn't, which is a Ponzi scheme, an open Ponzi scheme. Let's start getting the greater fools to come in and keep pushing up the price. Let's play number go up. And
well, that's that low faith demoralized reaction.
Yeah.
Yes, but what I'm saying is the difference. You made the analogy to the smartphone, for example, or any other technology. There is this well-established Gartner curve, as they call it.
It's got a fancy name.
What emerges from it is innovation, and that innovation takes things from that concept that people love but didn't quite work into something that really works and that people have mass adoption of. It drive that initial success proves the case. The trough of disillusion creates the impetus for innovation to really solve what the proof of concept established could be solved. But that's not what happened with cryptocurrencies. With cryptocurrencies, it was, well, let's not innovate. Let's just try and turn this that doesn't work into something that we can make appear like it does. And what we're seeing with the Spar claim on LinkedIn, and that's just one of hundreds out there that I know of, thousands probably, is this claim that we can make Bitcoin work. How? By intermediating it in multiple ways with some regulated and some unregulated actors, and we all just have to go back to this state of trust. Trust that we must now trust the messenger, not the message, in order to operate securely at scale. Bitcoin, cryptocurrency, blockchain is about being able to trust the message, not the messenger, securely at scale. And that has been thrown out in order to drive the price up and get us out of the state that we're in, which is that actually we're still in that trough of disillusionment because nobody is really, apart from us, nobody is really saying, okay, well, let's take that amazing proof of concept and turn it into something that really works.
Well, imagine if.
But I mean, there are a lot of different ways you can innovate, though, and I guess people get upset when, for example, you say that the incentives or the purpose of this is to create Ponzi schemes or whatever. I think one thing that's really interesting about incentives is that they're very often to a great extent structural. Like Craig puts it, capacity informs intent. Like, for example, there were a lot of innovators, like old market style innovators who looked at blockchain in like 2016, 2017, but then they all left because they could not innovate in their way with that technology because it didn't allow for it back then. It wasn't technologically mature. It allowed for a lot of other kinds of innovation like Web3, highly innovative, except it's not really grounded in sort of old world fundamentals. So, and the thing that happens is that when you create levers for a different kind of innovation, that attracts people who think that will be quite fun to exploit. Kind of like if you create a huge bureaucracy, that will attract people who love to innovate in terms of coming up with new ways to regulate people. So innovation for them is finding out new clever ways of controlling people, because that's what they're about, which other types of innovators hate, because it dampens their capacity to innovate their way. And so in a sense, I guess what we are trying to say is we're trying to get back to what was the original idea of blockchain, solving the problems that made all the old innovators go away. And by the way, you could say stablecoin was an innovation that solved a problem in the context that practically all the blockchains had more or less evolved into the big business case, the main business case being the price of the coin, and just trying to drive the price up and speculating. And then central exchanges would solve the problem of speculating at a lot of different coins. But you still have to have some kind of value of a reference value, right? So
so what was happening in that context is, let's say I had WonderCoin, and you're the exchange that WonderCoin is being traded on. If I want to take the vast increase in mark-to-market value of WonderCoin in US dollars, that it's being priced in ETH, which is what was happening at the time. So WonderCoin is priced in ETH. The price of ETH is alleged to have a dollar value of X. So therefore, I can take the dollar value of the ETH versus the amount of ETH, the TVL, and so on within the system, total value locked, and say my WonderCoin is worth this many ETH, and therefore it's worth this many dollars. Now you had, as you point out, the problem of, well, how do I actually get to the thing that I really want? Because remember, the whole game with the, should we generously call them crap coins, was saying to people, you have terrible, awful dollars, euros, yen, whatever it is. That's a terrible source of wealth. It's awful, and it's not going to keep going up in price because they're deflating it. Taking a lot of the messaging from Bitcoin effectively and saying, so how about you swap your terrible US dollars for my amazing WonderCoin, and you will suddenly be richer and better, and everything will be good with the world. And I will take those awful fiat money things from you and convert them into real estate in various places that will make me extraordinarily rich and a Lambo. So hence you used to get the bleating on the community channels about these things of when Lambo, when Moon, which is all about the price just going up. But as you point out, Ulf, that going up in price is only worth anything if you can cash it out into something that is worth something. And this is the classic thing. And when people tell me I'm up X amount of money on a trade, and I say, have you closed
in
the
theory?
And they say, no, but I can at any time. And I go, yeah, really? You really think you can close that trade? Okay. How big a volume have you got relative to the market volume?
Yeah, you might be the market.
You are the market.
With some of these coins.
So the thing is, the exchange was in this rather invidious position that they were essentially going long ETH all the time in order to give you dollars. So they were going into the market to buy dollars to then give you the dollars in return for which you gave them the ETH. And all was well with the world as long as the number on ETH kept going up, because then the exchange was in a very nice position of swapping today's dollars for tomorrow's, hopefully larger number of dollars for the same asset, the ETH. Stablecoins fixed this because it allowed somebody else to take that risk, in a sense, because what they said is, well, hey, we've got loads of US dollar denominated assets, and we will create a token that's referential to that, and we'll make this into a stabilization of the dollar. So now the exchange can run a USDT, which is why it's the dominant player in this context, and say, hey, you can sell your ETH for USDT, and then we will take the risk that Tether can actually fulfill what they say they have.
Well, and as long as they're stable enough compared to the other crypto coins, then they serve a purpose. Correct. And it's very similar to how most people who buy shares in the stock market don't do it because they want to vote at the annual shareholders meeting
Correct.
for that company. They want to buy the shares that are going up in price and sell them off before they start going down.
Or are distributing
Much like those.
dividends
Yeah.
or doing buybacks. But these are all means of
We have-
rewarding shareholders for the risk they've taken in holding the asset.
Yes.
And then the
We've
second
got-
thing-
But the return is that you actually are richer at the end of the day in US dollars or something, actual money. And
So long
the problem
as that
with
money
trading in
supply
a
hasn't been debased in the meantime.
Right,
yes,
which it has.
but if you're trading in a crypto exchange, if, for example, USDT seems to be stable enough for your purposes, you're kind of fine with it.
Well,
What we're seeing now is something different, though.
if the M0 is inflated by 30% while your GDP went up by 3%, did your GDP go up?
No.
These are the questions that we dare not ask.
Yeah.
I think
but-
there's three factors in play at once, though. One of them is the longevity of the Ponzi, which is the same problem that we ran into in 2008, which is that you've got entire financial services careers staked on this now, and the guy's been there years. This never fails. It always goes up, and he's going to tell you to shut your mouth because I know what I'm doing. I've been here for years. I know how this works. I know the cycles work. Got all this fake analysis about the fake. The underlying thing is fake, and so on top of that, he's got analysis of how the fake thing works, and it feels very real because that's his whole career at this point. And he's a senior analyst
the illusion of credibility to the fake
of the real
face.
thing. Another factor is the trough of despair, which we are still in. However, imagine if the Newton, which the idea of which eventually became like the Palm Pilots and Newton and stuff like that, that eventually evolved into the smartphone concept. Imagine if every one of those was like a Beanie Baby, and everybody was trying to tell you that their grandmother's going to be rich someday because their Beanie Baby collection is going to be worth a gajillion dollars because they're extrapolating stupid ideas. It's kind of like the person that says, my 2,000 gram baby is now 8,000 grams. Pretty soon he's going to be 29 million kilos. Like, it's, you can't, there's a limiting factor to everything. And we throw those out and we want to do fake analysis. So we got the Beanie Baby problem meeting the trough of despair plus the longevity of the scam equals this entire fake industry. And all of it depends on the low faith assumptions that a handful of people that got this started understand, which is nothing new is being built or created here. It's all just numbers moving around, but there's no new factory. Ground hasn't been broken. There's not a new dam. There's not a new highway. In fact, infrastructure is falling apart. This is like the opposite of a good world. We're all going to get to be rich in the crap sack dystopia. That's ridiculous, but that's kind of like the direction that you race when you play the financialization game. You destroy everything like a plague.
Low faith. They almost experience us as low faith because, we're all here complaining about how this game is fake, but everyone knows like the game keeps working as long as you say it's working, as long as you try to build trust in it, then the music doesn't stop until.
Why are you messing it up for the handful of us that are winning?
Right, and so to all the people with careers. And
so then we get to the genie
low faith
legislation and
Genius.
basically legal.
Genius?
Yeah, that's what the acronym bears out to.
Right.
Stable genius
and
with
legislating.
stable coins.
So I guess we've established that stable coins kind of served a purpose in the fake economy that was crypto exchanges. How does it unlock innovation to bless them with some form of legal status? Please explain to us, Greg.
It legitimizes it, but it's not actually necessarily solving the problem. Now, what I point to when I look at these stablecoins and these other actors around this is that what we're seeing is an attempt to rearrange the chairs on the deck chairs on the Titanic. The Titanic is still going to sink because the Titanic is this entire fakery that Craig was talking about. And we'll come back to the third of your things now in a second, Craig. But
I can stay above the water if I keep stacking deck chairs, though. It's fine.
It's not even that. It's as things stand, we talk about there being two huge anti-human, and when I say anti-human, I mean us as a body of people, anti-human aspects to the existing economic system. The first is that the state prints money. It debases money. And what that means is that it debases you. It devalues your work. It's reducing the value of human capital. And as a process, that eventually leads to the state we have now, where when you talk to people, they say, yeah, well, my grandparents, my grandfather had a relatively ordinary job, and yet he managed to raise 6 children, send 5 of them to college, and have 2 cars, and so on and so on and so on. My children won't even be able to afford a car other than on a lease plan. This is what we talk about when we say that's the debasement of humanity. It's literally debasing human capital, because human capital is denominated in this instrument that is being printed, inflated. The money, the supply of it is being inflated in order to continue to pay for things the government is spending money on that it doesn't actually have the tax revenues to cover. Hence, all of these countries are running massive deficits. And if I appreciate people say you can't compare households or businesses to nation states, but ultimately, when you say you can trust that this note is worth this much money, the question about what that money is should come into play for you. And trust in what way? Who am I trusting? What incentives do they have to be honest about this? What incentives do they have not to debase this? That's tax number 1 upon humanity. It's at the point of source, if you like, creating more so-called money, and in creating more so-called money with the same base, you end up devaluing everything else and increasing the price of real assets, so that keeps up with the inflated money supply, but our work does not. The second part is the entire economic system is made up of fractured, broken, fragmented infrastructure run by rent-seeking institutions and connected by rent-seeking institutions. So all of our economic activity is being taxed. In the example given, it says, oh, we save loads of money compared to Visa. Okay, but when you're using Visa cards and all these things, again, these are rent-seeking intermediaries that are operating platforms that are disconnected and have high friction to connect between and to use. Those costs are a cost upon our economic activity, a significant one. That the system offered is slightly cheaper than what is there, or a lot cheaper, doesn't change the fact that it's still relying upon an intermediary who is a rent seeker taxing that economic operation. The whole thing.
When we complain about intermediaries, but the whole point is that once there's intermediaries, they become institutions, and as we keep seeing every time there's an institution in charge of things, they love to play these credential games, these as long as nobody questions it, games that 20 years later some event completely unwinds.
Yeah. And Jarvis, that's a well-made point, because when we talk about these intermediaries, what is their incentive to be honest? Well, their incentive to be honest is, well, if you don't and everything goes wrong, you're bust. Okay, but that's not what happened. What actually happened in 2008 and happened in previous financial crises around the world prior to that was the privatization of profit that had hitherto gone on within the rent-seeking institution turned into a socialization of risk. So they're not only making outsized profits relative to the service they provide, which is the intermediation issue that we call out, they're also doing so in a risk-free way, because they are privatizing profit and socializing risk through the cabal, the sort of the join between the statists who are printing money in order to continue to pretend that the state is liquid, and the corporatists who are taxing the use of that money.
And while it is true that states don't go bankrupt like corporations do, the music does stop eventually.
Yeah, well,
and we have seen that.
prior to
with
the
failed
euro,
states
if
and
you-
failed currencies.
Prior to the euro, if you had Italian or Greek bonds, you were expecting really high yields on them. Why? Because every few years they would say, hey, we can't manage our debt anymore, so we're just going to default on a big chunk of it. And you wanted to make sure that you'd had your money back with some veneer on top for taking the risk in order to take that particular risk. The euro hid that falsely, and this is why we had the whole situation we had in 2009 with the Troika, the IMF, and the European Commission going around telling people, well, you're going to have to nationalize this and change that, and you have to do these things. And these countries were saying, but hold on, we were borrowing money from you because you had all the money just sitting there in your accounts, and you needed someone to Craig's point, you needed somebody to take out the loan in order to keep the circus moving. So we did. And now you're punishing us for being the ones that kept your circus afloat. Look, all of this, it's like we develop this amnesia the moment that we feel things are going to be okay and we're comfortable. And that's tragic because the problems aren't going away. And the innovation, other than what we've done, just hasn't been there, saying, no, this was a great idea. What you're trying to do isn't that. It's something else. You're trying to create an instrument for speculation. That isn't what money is. Money is not a speculative tool. It's something that you might cash out your speculative tool into, which is what we talk about when it comes to the stable coins. You've got the speculative instrument. You now want to be able to spend the value. You can't spend it because it's clown coin or whatever you want to call it.
It's not really liquid.
You can't buy anything in the real world with it. You can only buy imaginary value in number go up. So now you need to cash that out into something that actually is meaningful within the context of your life. And the moment people do that, they think the problem's gone away. And as Jarvis talked about earlier and Craig's talked about, what you end up with is this state where people are acting in a very low faith way because they perceive the system itself to be low faith. And they would just like to get ahead of it and be slightly lower faith earlier so that they can profit from...
It's a race to the bottom.
Well, it is, but you touched upon it at an institutional level. You said it was a race to get back to your domestic currency.
Mm-hmm.
You know, all of these things, these were low faith operations that essentially said people aren't paying attention. We can just keep printing money like this, and that we can turn that money into Porsches, Lambos, and property.
And they were dressed up as respectable too, because the people who looked like they were making money, well, they were making money. They weren't making anything real. They weren't doing a real job. They were the people that got into the low faith play first. They then have money. They're wearing the nice suit. They physically look different. They look like that's what respect. They look upper class. That's what upper class people look like. That's the way that they dress the way that lower middle class people think rich people dress, right? And that gives it this appearance of respectability that, oh, that's what I should do. I should get involved in in a broad sense, financialization, because that's the thing to do. That's where the money's at. I'll catch a bit of the flow. I won't do I'm not going to make anything. Why would I do that? That's what dumb people do. Dumb people work with their hands. Dumb people actually produce things. That's stupid. That's the old model. The new model is lots of money just moves around, and I'm going to catch some, and now I've got money. And money was the whole point, right?
But the point you're raising there is actually...
And the Chinese produce it.
A wider way of looking at what you just said. That's interesting, is what you're essentially arguing is that we're still feudal in our way of thinking, and we look at the people who are above us in the social strata and assume that they are doing things the right way and that this is a good thing. The problem with that analysis is that we no longer have a feudal system because there is no accountability up and down. That was the whole point about the feudal system. The feudal system had accountability in both directions.
It was a pretty harsh accountability too. The violence functions of society have also digressed to the lower classes in a lot of cases, and the argument's often made that because there's no aristocracy, the rich people can make up wars and send the poor people off to go die in them, which was not the case before.
Very much
in societies, it's right. It is now. So there's this. How'd you say it? There were no knights in the aristocratic class that didn't have calluses, not from farming necessarily, but they did have calluses from doing pretty hard things, which is being always ready for violence. So there's a violence function that was somewhat self-regulating. That also gets into the myth of the Dark Ages in Europe being just purely barbaric, which was not the case. But there's a whole bunch of weird history stuff around this subject as well. But the way that society structures itself, if you find societies that have been able to build themselves out into high faith societies, in a high faith society, you find often a degree of respect for the farmer that goes to the extent that when there is a civil war, it's absolutely forbidden, not by a law or anything, but by custom, to not harm them, because that would spoil things coming up later. And there's a sense of this kind of forbidden to harm them. That total war is absolutely off the table when it's an intramural war. And that's when you have some shared culture going on. When you have alien cultures fight, though, no, it's total war. And Holocausts are on the table, and we're entering the weird period like that where we're having low faith societies come into clash together now, and high faith societies are devolving to low faith societies, and it's a big crazy mess right now, and the debasement of money is at the heart of some of it, and I would hope that we can make a dent in that that part that's collapsing, kind of fix that.
This is turning into a cheerful conversation.
It is. This is Greg's on.
Greg, you're muted.
Sorry, it's one of those things that has made me consistently angry for many, many years that you're talking about, which is what we've seen evolve from the Industrial Revolution and the elevation, the creation of the destruction of the feudal system, and being replaced with essentially the monetary system, in which your station within society is driven by how much money you have. So in Vietnam, for example, if your parents were rich, you dodged the draft. It was the poor white and black and Hispanic people who got drafted and sent out to fight in Vietnam. And this is consistently playing out over and over again. So what happens is that we see a society in which the haves get to parade their conscience using the have-nots children in yet another. So they get to parade their conscience using other people's children in yet another person's country. And this is exactly what we had in the everlasting wars. This is the neocon agenda, is to send as a people, it's our children who must be sent to fight in another person's country in order to parade their conscience.
And I would
they
argue
have no
that
skin in this game. How many senators and congressmen who were voting for continuations of war in Iraq and Afghanistan had their children going out to do the fighting?
Well, they have skin in the game in one sense, in that they own all the defense stocks, and they go buy them before they do the appropriations vote, which they know is coming, which is somehow anyway. Pelosi stock trackers,
or you have the F-35, which every single person who's on the appropriations committee has jobs in their district, depending upon the continuation of this flawed project. But go on.
Which is, and there's the NASA problems as well. So that's one side of it, but I would argue that what has enabled high faith societies to maintain high faith to the degree that they were able to do things like create the British Empire, which is amazing. People forget that that's like way before there was radio communication. So you were really taking quite a lot on faith when the crown put out massive formations that cost tons of money and were powerful enough. They could have gone and just started their own countries and cut the crown off, and they just didn't do it.
No, they did. It's called America.
Well, no. You get to a point that and that's a complicated story, right? Where you start having low faith plays in two directions at once, and it creates division, and things get polarized and go sideways. And I would argue that during those sort of enlightened periods of high culture, you don't do that thing where the rich people identify that it is their responsibility to send their sons off to lead, even though the world might be eating them. that
Yeah,
you give
so
your sons up to be eaten. And
in a feudal context, knights started training at 6 years of age. They were deployed on battlefields as pages in their teens, not actually directly fighting. They served the knight who did go and do the fighting. But by the time they got to be knights, they were phenomenal trained athletes, warriors, who literally were at the vanguard of any battle. They
Right.
were the ones right at the heart. So when the aristocracy decided that we're going to duff up tribe B, they were doing so, taking all of the risk themselves. Everybody else's job
Right.
was more or less to support that fight. It wasn't to be the ones who were eviscerated by it.
That
When
right,
they
and that
said,
doesn't
I
mean
will go to war, they meant I will go to war, not I
And-
will round up some peasants and send them toward your machine guns and tell them to walk really slowly so you can get them all.
right. They didn't have the mythical we problem yet. We're gonna go do this. By which I mean you retards are going out to like that's what it means that
It's
we
like-
have the
it's
magical
like- it's
we
like
going
that,
on right now with socialism.
That classic Blackadder Goes Forth sketch where General Melchett calls Captain Blackadder into the map room and says, Blackadder, we've got a spy. The Germans seem to know what we're going to do before we do it. There must be a spy in the camp. And he said, so what makes you think that? Says, well, I can't remember all the lines, but he then turns around and says, would that be the one where we blow a whistle, walk up over the top of the trench, and then walk very slowly toward German machine guns, sir? My God, Blackadder, you know it as well. This leak is getting completely out of hand.
Yeah.
But the subtext, Ben Elton, who was the writer of that, along with Richard Curtis, what they were trying to point at was this argument that it was lions led by donkeys, but that actually wasn't true. That was true of the politicians. It wasn't true on the battlefield. In actual fact, the people who died in their droves, the people who died first and fastest, were the young officers who had to be the first one to go up over the top. So they were the ones that the machine gunners on the other side used to zero in and make sure they still had their firing lines correct. It was
Right.
young officers overwhelmingly who died, who were once upon a time the knights who fought in the battles. That's the sort of cultural, societal, what was left of the aristocracy of Europe died on the battlefields of 1914 to 1918.
There's
And in our
the
stories,
United States.
based on those times, one of the worst things you can be in any story written today of a time with honor was an arms dealer dealing to both sides. And now, because they're betraying the people who are supposed to be fighting for the country, now we've managed to one-up that by having the arms dealers decide whether we go to war or not. The arms dealers are the ones in charge, and it's the lower classes that get to go and fight the wars.
Which is
And,
to Craig's point, that
these-
the military-industrial complex and the political appointees of who's going and just people who are deciding who we're going to go and fight next are so intrinsically enmeshed. And we're back to this point of incentive. What is the incentive? The incentive of the people who own vast amounts of Lockheed Martin shares is to continue to perpetuate the Everwars.
I guess there's sort of a meta question here, which is, what game are you playing? Are you playing the game where you just get money and you don't care if your pursuit of money is in some way corrupting the world and destroying it? Or do you want to be a member of a society where you live in a high faith environment and your children are what you care about in terms of your legacy and future, not you? And do you believe anything bigger than you? Those high faith questions are what block people from engaging in things where they go, I could make a bunch of money over here, but it's fundamentally wrong, not just because it's like, there's some rule that says it's wrong or whatever, but because I know that if I engage in this, I'm encouraging the progression of a game that's going to result in me being a rich guy living in a crapsack world. Why would I want to be a rich guy in a dystopia? That's ridiculous. But there's people that like that. There's crazy people who are like, I don't care if the world burns as long as I get to have a walled garden where I'm fine. And it's a huge separation between the type that thinks that's corruptive and destructive to society, and people that You can't make the thing is you can't make laws against this. The more laws you have, the more screwed up your society is, because it means that there's misses happening. And if you live in a high faith society, you don't have those misses happening, so everything can be weird that happens can be handled case by case through judgments, as opposed to we're making hard and fast laws because one guy screwed up over here, so we're going to just like oppress everybody with this new rule.
Actually, Craig, sorry, what you're saying is a really interesting point that there's been some good flippancy around in the past, but it illustrates the point very well, which is that we had laws that were principles driven when we had people who observed principle.
Right.
In a world in which nobody has any principles, principles-based regulation and legislation doesn't work. It has to become prescriptive.
Right.
And you're exactly right. What you end up seeing in a low faith context where you cannot rely upon there being principles and mores and values that we share and respect is a state where you literally have to prescribe every single thing.
Mm-hmm. You go from the university honor code to prison life, and it's silly.
Now, there is a book that came out recently that actually talks about this by an author named Edmund Burke, Reflections on the Revolution in France.
I'm not sure that, I mean, Ulf, you may be a bit Yoda-esque, but I'm not sure that your lifespan actually is that of Yoda, that you can refer to Edmund Burke as being a recent author.
So let's see if I can...
maybe it's a different...
It came out in 1790. But actually,
yeah, that's some
talks about
that's
this
some Yoda time spans
very well.
by which it would be regarded as recent.
And he actually spent some time talking about the Glorious Revolution in England. We actually had a similar Glorious Revolution in Sweden, where the nobility basically just marched over and deposed the king, and then found a new one in an orderly fashion because they didn't want to wreck the system. They just decided that they had lost confidence in the existing king.
It's impressive.
Yeah, and I guess that's the kind of thing that can happen in a high faith society where you have nobility that actually is deeply invested in the well-being of the nation, so that even when they lose their temper with the supreme ruler, they will basically just go in and swap him out. Say, okay, you're not it anymore.
We're
going to give you all the power.
Is a renegotiation of the settlement of governance. And that can either happen in the Glorious Revolution type context, where there is a threat of violence sufficiently well perceived that it is acted upon. You can have the Magna Carta, where the barons confront the king and say, you can't keep doing this. And you then have a renegotiation of the contract of governance within society. The idea that all of this is settled is a nonsense. And actually, we're seeing right now what's happening all over Western civilization, especially, is an urgent need for a reassessment of the governance contract between the elected and the electors.
And a deliberate pollution of that with the reason that we're having a low faith invasion is because the whole effort is to pollute the society with as many low faith elements as possible to force an authoritarian reaction to that. And that's the exact opposite of what you want if you're going to aim for a renegotiation of power.
So,
well,
let's try and bring this home, because where did we start? We started with a post that I referenced in which it was just saying something that has been said many, 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 many times before, which is you can now buy X with Bitcoin in place Y. And actually, that isn't true. Somebody has a ledger of Bitcoin in which you can participate, and somebody else is providing an interface that allows that ledger to be used in your jurisdiction. one entity, the one that operates in your jurisdiction, is regulated. The one that provides the ledger is not. And this is problematic because actually we're back to trusting the message. We're trusting the messenger rather than the message. And we have no way of having oversight of whether that messenger has any authenticity to what they're claiming. And our position is that, guys, this really isn't what Bitcoin was about. Bitcoin, it's in the title of the white paper and it's all the way through the document. It is a peer-to-peer electronic cash system. This is not a peer-to-peer electronic cash system. This is a peer to intermediary to intermediary to intermediary to unregulated custodial provider to intermediary to peer electronic non-cash system, electronic ledger. And it's two very different things. We're seeing a similar thing emerge with stablecoins where we're being told, hey, we will run a money market fund in which we share none of the yield to you, the person buying shares in our money market fund, and we will just profit from the whole thing ourselves. But you're happy with that because we allow you to exit Clowncoin and move from Clowncoin to this instrument and that instrument into things, a currency that you can actually buy real assets with. Because, go back to the point, Bitcoin doesn't allow you to buy real assets. It doesn't work. It is a peer-to-peer electronic cash system, proof of concept. So with that, we're looking at how all of these things are really pulling at the very heart and core of what it is that makes society work, what it is that makes our communities work, and ultimately our economies. And at the end of the day, the point that we would make is that there is a trough of disillusionment that we entered when we realized that Bitcoin was not capable of fulfilling the role of being a currency. It was not able to be the peer-to-peer instrument. It was the thing that opened the door and shone the light on the direction. And rather than innovate out of that trough of disillusionment from Palm Pilot to iPhone, instead, we just tried, or not we, the crypto bro world tried to pretend that it did work through these intermediations, fudges, and fakeries. Our position is, actually, let's go back to it. It was a phenomenal proof of concept. How can we make it hundreds of thousands of times more efficient and allow it to become a real money that really works? Money as a mint source that we don't have to trust the issuer. There is no issuer. It's an actual blockchain that actually works, minting real money that really works. Answer in the comments. Talk to us. Tell us what your experiences are of this. Give us some examples that you have of these kind of activities in place, and tell us what you think is happening and how you think this can and should be dealt with. Thank you all for your time. Bye-bye.